You know, everyone's talking about AI these days. The flashy demos, the latest chatbot. But behind all that noise, there's a much more interesting, high-stakes game being played. It's a strategic battle for the very foundation of this new world. Today, we're going to look at the AI chessboard and analyze the critical moves these giants are making, moves that will decide who really wins in the long run.
All right, before we dive in, just the standard disclaimer. Everything we discuss today is for informational purposes. It is not and should not be taken as investment advice.
So here's our game plan. We'll kick things off with Alphabet, the big incumbent, and the dilemma it's facing. Then we'll get into the weeds with CoreWeave, a fascinating look at a huge infrastructure gamble. And we'll wrap up with Nvidia's absolutely brilliant strategic move, before we pull it all together with some final takeaways.
Right. Let's start with Alphabet. For years, Google has been the undisputed king of search, but now it's facing what might be its biggest challenge ever. So the real question is, how serious is this threat?
This is really the multi-trillion-dollar question, isn't it? We keep hearing that OpenAI is gearing up to launch its own search product, its own ads business. So, is Google's fortress about to be breached? Well, as you can imagine, it's a bit more complicated than just a simple yes or no.
Okay, to really understand what's happening, you have to get this distinction. The most immediate threat to Alphabet isn't its business collapsing overnight. It's what we call narrative risk. Think back to Meta when TikTok exploded onto the scene. The market started to price in this big, scary threat, which pushed down the stock's multiple, basically what people were willing to pay for its earnings. And that happened long before TikTok actually put a real dent in the numbers. The story can hurt the stock way before the competition hurts the business.
And this number, $60 billion, this really puts that narrative threat into perspective. That's a rough estimate of what a mature ad business from OpenAI could look like. I mean, that's about the size of Amazon's entire advertising operation right now. Now, is that going to kill Google's business next year? No. But a potential competitor of that size, that's more than enough fuel to create a negative story in the market and keep a lid on the stock price for a long, long time.
So while Alphabet is fighting that battle up at the application layer, there's another war being waged down in the foundations, the picks and shovels of the AI gold rush. And that brings us to our second case, CoreWeave, a company that is making one of the biggest, most leveraged bets I've ever seen on the future of AI.
You know, this quote really hits the nail on the head. The best way to think about CoreWeave is like a highly specialized real estate developer. They're taking on huge, long-term debt to build an asset that they are betting will be in sky-high demand. But instead of skyscrapers, they're building massive data centers filled with GPUs.
Let me walk you through how this gamble works, because the timing is everything. First, they sign these incredibly long data center leases. We're talking 5 to 15 years. That's a massive fixed cost on the books. Then they order the GPUs, which can take 2, maybe 3 years to even show up. It's only after all that they go and try to sign up clients, and those contracts are usually for a shorter period, maybe 5 to 10 years. Imagine signing a 15-year lease on an office tower and ordering the steel, which won't arrive for 3 years, all before you have a single tenant signed up. If the market for office space collapses in that time, you are in a world of hurt.
And when you actually look at the numbers, you can see just how risky this is. We're talking about financial leverage of around 5 to 1, so they're heavily dependent on debt. Then there's the customer concentration. About 80% of their revenue comes from just 2 clients. If they lose one, it's a huge problem. Now, that 18% return on capital might look okay right now, in the middle of a boom, but is probably not enough to compensate for this level of risk. A simple 20% drop in what they can charge for GPU time could basically wipe them out.
So let's be very clear about what this is. CoreWeave is a pure, highly leveraged bet that this AI gold rush goes on forever, and that the price for GPU computing time stays incredibly high. You know, during a gold rush, the people selling the picks and shovels can make a fortune. But this is a business that's betting the entire farm that the gold rush simply never ends. Okay, now for our last case study, and this one is just a masterclass in strategy. We're looking at Nvidia, the current king of the AI chessboard. This isn't just a story about selling more chips. It's about making sure you control the entire board. It's absolutely brilliant. So to really get why Nvidia's latest move was so smart, we have to quickly talk about something called high bandwidth memory, or HBM. Just think of it as the jet fuel for high-end GPUs. They can't run without it. The problem? There's a huge global shortage. Prices are soaring. It's become a massive bottleneck for the entire industry, including for Nvidia itself. So here's the play-by-play. Nvidia saw this HBM bottleneck as a serious problem. They looked around and identified this company, Grok, that was making a totally different kind of chip,
one that was great for AI inference and, here's the kicker, didn't need any HBM. So what did they do? A massive $20 billion licensing deal to get their hands on the technology and, crucially, almost all of their talent. In one single move, they solve their supply chain problem for a key market, and they take a very dangerous potential competitor completely off the board.
This analogy is just perfect. This move wasn't about buying a piece of technology. This was a preemptive strike. It's exactly like when Facebook bought Instagram. They saw a future threat to one of their most important markets, in this case, AI inference, and they just eliminated it before it had a chance to grow.
And the genius is really in the execution. Because it was a licensing deal, not an outright acquisition, they probably dodged a huge antitrust fight. They scooped up some of the best engineering talent in the world. They solved their HBM problem. And, maybe most importantly, it shows they realize that their own GPUs might not be the best tool for inference down the road. So they're getting ahead of the curve. It wasn't just a good move, it was a checkmate.
So let's step back and connect the dots. We've looked at 3 very different companies, 3 very different strategies. What does it all tell us about how this AI game is actually being played?
This is the key insight right here. Everyone is mesmerized by the latest, greatest AI models. But that's just the fireworks show. The real war, the one that will determine the long-term winners, is being fought in the trenches. It's a fight for control over the core infrastructure, the essential talent, and the critical choke points in the supply chain.
So what's the bottom line here? What are the big strategic lessons we can pull from all this?
Okay, let's boil it down. From Alphabet, we learn that the market's story about your company can hammer you long before your financials ever take a hit. From CoreWeave, we get a brutal reminder that these pure-play infrastructure bets can carry terrifying amounts of hidden risk. And from Nvidia, we see what a true market leader does. They play chess, not checkers. They act decisively to control their own destiny.
And that really leaves us with one final thought. As this whole thing plays out, maybe we should focus less on who has the slickest chatbot this week and more on who's making the moves to control the entire board for the next decade. The next time you see a flashy AI headline, ask yourself a different question. Who is really winning the strategic game? Because that's where you're going to find the real winners.